All right, good morning, trade pros. Welcome to our morning market update for Thursday, August 29th of 2019. Boy, it's Thursday already. You want to hear something crazy? It's 29th of August already. That's even worse than just a Thursday, or better, I guess. Today's morning market update, we're going to talk about a lot of stuff. First and foremost, yesterday we made a suggestion, or we had an idea, an impromptu idea that Mark shared with me on written note, like carrier pigeon almost, that landed on my shoulder, and I had a note. And the idea was to share a day of our live day trading room with you guys on YouTube. And we're going to go ahead with that idea. One slight glitch, though. We said it would be next Wednesday. It's actually going to be next Thursday, September the 5th, that we're going to do this. We'll put the link in the description of the video here down below today at some point in the afternoon. We're just figuring out the process. But next Thursday, September the 5th, you are invited to our day trading room for one session where we're going to trade crude oil and the S&P 500 to start. Crude oil inventory reports usually on a Wednesday, but because this Monday coming up is Labor Day and the markets are closed, crude oil is pushed to Thursday at 11, and natural gas is Wednesday or Thursday at 10:30 in the morning. So it just gets pushed forward one day, and so we're going to push forward our offer to you to the Thursday, September 5th, market down 9 to 11 a.m. You guys could trade with us on the house. All right. I hope you're excited because I sure as heck am. All right. Let's get into our topics for today. There's an end of August asset allocation taking place. What is an asset allocation? These massive institutional funds, money managers, all right, ETF managers, mutual fund managers, the money that manages money, basically, the portfolio management business, promises investors an asset allocation model. They say you want to be conservative or a balanced fund, 50% equity, 50% bonds. All right, it's more like 40-40 and then 20 cash, or 45-45 and 10 cash. But they promise a balanced fund. If you want something aggressive, 80% equities, 20% fixed income, bonds. No matter what the asset allocation that's promised to an investor, they have to restore that allocation. They have to rebalance to get to that model on a monthly and quarterly basis. So equities for the month of August so far are down 1.7%. They're in a mean range between 28.20 and 29.20. We're in a 100-point range on the S&P 500 market, and that's what we have. All right. In the meantime, though, bonds are up 6.9% for the same time period. Huge rally has extended in bonds in the month of August. All right. So what's going to have to happen is if you think about a portfolio that's balanced, let's use that example, 50-50 equity to bond split. Bond valuations have gone through the roof. Equities have gone down a bit. So what that means is at the end of August, for the reallocation, funds have to sell bonds and buy equities to restore that balance. All right. And that's the last couple of days of the month and of the quarter, more specifically. Quarter end reallocations are more violent and more reliable. However, end of month, there could be some reallocation pressures as well to sell bonds and buy stocks. So at least in the short term, for the end of this week, we're expecting to see a little bit of buying in the equity market. And it's already kind of happened actually overnight, but there could be more. All right. So that's the asset allocation that I wanted to talk to you guys about end of month. Super important. And for many of you, this is probably the first time you're hearing it. Stock futures are up this morning on pre-Labor Day rally. Labor Day is on Monday. Markets are closed. I'll still do a YouTube live to say hi to you guys. Dow Jones is up 228 points so far, and it's on the back of news out of China that China won't immediately retaliate to this latest round of tariff increases by Donald Trump, set to take place on September 1st. All right. That response of not immediately retaliating provided a risk-on scenario and a fear-off scenario. So the fears have subsided a little bit, which has provided a little bit of a boost for the S&P 500. All right, what's more, according to China's Commerce Ministry, this time it's coming from China, the Chinese delegates are thinking of setting up a round of face-to-face talks with the United States in September. So that has the appearance of progress. Will there be any meaningful conclusion that comes out of this? Will the trade war be dismantled in this meeting in September? No. All right. More than likely, no. However, it's good news, and good news gets priced in. All right. The market is in a big bullish trend, and any good news, no matter how small, gets priced in more aggressively. That's just how it is. All right. So we're getting a little bit of rebound. The idea for China is they want to have calm attitude talks, whatever that means. But that's sort of the scenario we're walking in this morning. That's why I see a little bit of upside overnight. In another news item today, Tesla is planning to offer insurance. Model X, Model 3, Model S owners in California will have the option to take out auto insurance through Tesla at a 30% discount to typical premiums for Tesla insurance. Right, so the company is insuring their own products. It sounds fantastic, and there's a reason for it. Insurance rates for Teslas are high, especially with a lot of them making really public and media appearances when they spontaneously combust and burst into flames. All right, or the autopilot crashes, etc. So the auto insurance industry hasn't taken favorably to Tesla. So Tesla's going to start offering their own insurance. It starts with California. They're planning to roll it out in the United States. No details have been given by when, but they are starting in California. Warren Buffett, a tycoon in the insurance and reinsurance business, says that he criticized the venture and said that Tesla heading into the insurance market is going to be hard for them. They're going to struggle as it heads into a new venture. Obviously, Donald Trump, Warren Buffett and Berkshire Hathaway have a lot of resources invested in this business. It's an obvious stance for him to take. All right. You don't expect him to say anything different. All right. It's competition for him. Another thing that happened in the last 2 days, yesterday primarily, that interests me a lot and a lot of institutional traders is the United States and the Trump administration is considering doing something drastic. So I've told you before that some countries have issued 100-year bonds. Why? Because they want to lock in capital. They want to sell people a product that allows them to invest for an extraordinarily long time because they need that money. And the promise to repay a bond in 100 years is useless to you because you're going to be dead. All right. And so am I in 100 years. We all are, unless something crazy innovative comes out. And I don't know if I would do it, to be honest with you. I want to have an expiry date. That's when you're best before a certain date, right? Steve Mnuchin, Treasury Secretary, said that they're let me quote this for you, under very serious consideration of issuing a 50 or 100-year bonds for the United States. All right. The Treasury Borrowing Advisory Committee is strongly disagreeing with this. JP Morgan, Chase & Co., Bank of America, and Goldman Sachs. They're obviously going to disagree because that takes away their deposit. All right. Deposit is the lifeblood of any banking institution. All right. So that discussion's ongoing. It's very interesting. Love to see how it goes. This happens as a 30-year bond declined to a new record yield yesterday. All right. 1.9%. After it slid below 2% for the first time earlier this month, it's now set a new record low at 1.9%. So yields are dropping, which means the cost of borrowing money is decreasing. And it makes sense the United States wants to borrow for 100 years because it's so damn cheap to borrow these days. All right. And with the effect of inflation, you give me $100 today, I give it back to you in 100 years, you might not even be able to buy a bus ticket with it. All right. So that's the idea behind this long-term debt. I don't see a lot of demand for it. I remember, what was it, Austria? A bank recently did a round of 100-year bonds, and there was disgustingly low demand for it. They wanted to finance 200 billion and got something like 60, way below what they had initiated or initially thought they would sell. All right, there isn't that much appetite for these long-term, low-paying investments. I wonder why. All right, in today's markets, in Asia, Japan's flat, Hong Kong's up 0.3%, China's flat, India's down 1%. So flat markets around Asia, but in Europe, London's up 1.2, Paris is up 1.5, Frankfurt's up 1.2%. So European equities are taking a run. In the U.S., Dow and S&P are up 0.9%, Nasdaq's up 1.1%. We're getting a little bit of a rebound in the equity market on the China news. And on top of that, we have a lot of buy stops above the 2,900 level. All right. As soon as we got through it, we ran the stops very quickly. We got to 29.19, 3/4 on the overnight highs. And I think 29.20 to 29.28 area is a huge resistance for this market. And so heading in today, yesterday, I'm going to be open honest with you guys. I tried the short bias. I got paid early on, and then I lost everything I got paid, and I had a red day yesterday. It happens. All right. Anyone that trades professionally that tells you they haven't had a losing day in 5 years is lying to you. Right? They're not trading professional or doing something illegal, neither of which I'd want to know about. So yeah, I had a down day. Great. Today, I have no choice but to show up again with a bearish opening outlook. However, it's temporary. Here's what you're doing. When you're selling a nice open rally like this, we're trading at the second resistance for the day off the pivot. All right. When you're selling rallies this strong, you run the risk of getting rolled over. All right. Remember that. So if you're going to sell, you're fading. You're starting with a fade. For goodness sake, do not get married to the idea that it has to go down. You could fade once, you could fade twice, heck, even 3 times. But if it continues to rally, stop fading and follow the momentum. I just see a little bit of a fade coming here off the R2 level early on in the session, mid-morning reversal, and up we go for a high close today. All right, that's what I'm seeing. Crude oil flat, gold is pretty much flat as well, but down overnight. Currently, it's rallied a little bit as of the open at 46.70 up to 54.40. So we are seeing a bit of a rally there. Crude oil is dipping off the open session. Bitcoin's down 6.6% to under 10,000, and that's a very important marker. Okay, today's economic calendar. We had a few news items. Initial jobless claims came in as expected. Revisions a little bit higher, but it's pretty much a non-event. The expectation was met there for initial jobless claims. GDP second quarter data. This is a second look at it, so it's not the preliminary or advanced data. This is just actually the advanced data has already come out. It is the preliminary, but the preliminary is a second revision already, so it doesn't carry that much weight for traders. It's pretty much info we already know, and it comes out at 2% exactly as expected. So again, non-event there. International trading goods in the United States. Donald Trump will be happy to know that the deficit has narrowed slightly, down 72.3 billion versus 74.4 billion. So it's a high negative, but it's a lower negative in comparison to what the expectations was. All right. 10 a.m. we'll have pending home sales. 10:30 nat gas inventories. 1 p.m. result of a 32 billion 7-year note auction. 4:30 money supply in the Fed's balance sheet. So not a lot of news items. We do have one on top of the hour. I think I'm going to start personally with a fade off the open. And if that doesn't work, I'm not going to get caught in yesterday's style of trading and continue to try to fade. I'm going to jump on board and enjoy the easy ride up. All right. Because I do believe there's a lot of buy stops. The only problem with getting long right now here as a day trader is we've already combed through a lot of the buy stop territory. And it's going to take a lot of buying to get it through this next level of 29.20. All right. Once the buy stops are flushed out, the question is who's the next buyer going to be? And it has to be the institutional money that comes in to start buying to take us higher. And they just might, because it's end of August asset allocation. They have to sell bonds and buy equities anyways. So the timing could be ripe for some more upside. You guys manage your risk, trade TRADEPRO. That's all that matters. Nobody knows where this market is going. And if you think you do, you're lying to yourself. Stop that and try to make money instead. It's a lot easier. Look at what the chart's giving you and use it to your advantage. We'll see you guys tomorrow. I hope you've enjoyed this morning market update. Remember, September 5th on Thursday, mark it down your calendar. You have a free pass to our live trading room. We'll send you the link through email, and it will be on YouTube. So I hope you guys enjoyed this. You said you wanted it. Here it is. See you tomorrow. Take care. Have a great day. Trade pros in the room. A lot to talk about this morning. When I was putting the morning market update together, it's like, man, there isn't that much news. There's a ton of news. I don't know why I felt that way. Boxy, over to you for crude oil, and then we'll bring it back to the headquarters here and talk about S&P. All right, so let me host you up, kind sir, and let's get started. YouTube, you'll see what this is all about in under a week's time. Take care, guys. Goodbye. Trade pros, hang on tight here. Doing well yourself?